Hello and welcome to the program. I am Folashade Ogurinde. The Shonubi-led Monetary Policy Committee of the CBN took a decision to hike the interest rate contrary to predictions of industry watchers. At the end of its two-day deliberation, the Policy Setting Committee of the Apex Bank raised the monetary policy rate, which measures interest rate, from 18.5% to 18.75%. The acting CBN governor, Folashodun Shonubi, said the moderate rate hike is to sustain efforts at anchoring inflation expectations, narrow the negative real interest rate gap, and improve investor confidence. For more analysis, Owolabi Sampson, who is a research and portfolio management associate at ZCrest, joins me now. Thank you very much for joining us. Now, contrary to many predictions, the NPC raised interest rates. Were you expecting this?
Okay, so thank you very much. Yeah, concerning that, I was actually expecting them to raise interest rates. I have a particular forecast that they are going to hike interest rate by maybe 25 basis points to 50 basis points, or they are going to, like, at most take a hold position just to measure the activities in the market. However, the CBN hiking interest rate is in line with my expectation because I believe that we are still seeing inflation trend upwards. Currently, inflation for the month of June is at 22.79%, approximately 22.8%, and it was at 22.4% in May. So when you look at it, you realize that we are still seeing the uptrend in inflation, which is an offshoot of the fact that the removal of fuel subsidy combined with the effects of the FX system liberalization. So when you look at all those factors, they point towards the fact that we are going to see increase in the prices, in general prices in the economy. So looking at these factors, there are major things and major things that are driving inflation upwards. And also when you look at some other issues in the market, when you look at the fact that currently we have the money supply tree at 64.3 trillion naira, which is like a record high. It is significantly high and it's something that we really need to look into and to factor in. And it's part of the reasons why the MPC decided to hike interest rate further. So we are seeing much of money in circulation. And another thing that is coming up is the fact that we are going to be having a palliative that is going to be distributed 8,000 naira to over 12 million households in Nigeria. When you look at this factor, it's also going to drive money supply in significantly, which in turn is going to lead to a general increase in the prices of goods. So this factor is something that the MPC needs to consider, which is why they decided to hike interest rate further.
So now that MPR has been raised to 18.75%, what is the expected impact of this hike in interest rate on the economy?
So looking at that, unfortunately, what I would just say is that we might not really see a significant impacts there because when you look at the fact that the MPC, they have been hiking interest rates since last year and they have been aggressive about it. The first hike was around 150 basis points and they did that two times, and then we started hiking interest rates by 100 basis points, and they started with a 50 also in the previous two sessions at their meeting. So when you see that hike, one thing that market usually do is that whenever there's a hike in particular stage, that when there are smaller hikes, it's what we are seeing in the Nigerian economy corridor from plus or minus 300. They changed it to plus or minus 100 to 300 basis points. It was at plus or minus 100 to 700, which means that one thing about the asymmetric corridor, just to break it down, is that it speaks to the SDF and SLF window, the standard deposit facility and the standing lending facility. Now, when you look at the standing deposit facility, it tends to be at let's say at minus 100 basis points of the MPR, and the standing lending facility is always always like at the plus. So when you look at it, the minus is minus 300 basis points for the SDF now. When you look at that, you realize that they are trying to like let's say, so they are trying to like mitigate let's say more inflows in the economy. So whenever banks want to place with the central bank, they tend to use this particular rate, the SDF rate. And whenever the CBN wants to lend to the banks, they tend to use the standing lending facility, which is at 100 or plus 100 basis points above the MPR. So when you look at these factors, these are supposed to be instruments that we are going to use to like limit money supply in the economy. However, looking at what we have right now, the SDF and SLF has been pegged before, and the CPN at the last MPC meeting, they did not really speak to that particular fact, to that particular policy. So it's something that we still expect them to say something about it. However, I do not see these factors like trying to like change the dynamics in the market, because when you look at everything that is happening, a 50 to 25 basis point hike, as I've said before, is minimal, and it might not really like the market has priced it in already, so it might not really have any impact in the economy. However, assuming the ECBN, they looked at the SDF and SLF, and they looked at the a way of like let's say setting it or liberalizing it so that the market forces are going to determine that rate, which would have been something that is going to like drive more change in the market. However, as we are seeing it right now, we might not really see any major or any big impact.
Now, of course, the CBN is not the only apex bank raising interest rates, as the Bank of England is set to raise its own interest rates now in response to surging inflation rate. What do you make of this?
Okay, so the Bank of England raising interest rates is something that they have been doing over time just to curb inflation, and we when we compare that with Nigeria, we can see that each market they have its own different dynamics, and they have their own factors that are driving. They have their own drivers that are really major on things that are forming the trajectory of events in the market. However, when you look at the UK economy, we have seen inflation subside over time in the UK economy. However, in Nigeria, our inflation is still sustaining an uptrend. So all these factors are things that they have a target for the UK government. They have a target for inflation, which is at 2%, and inflation is still significantly higher than that. So it's something that they are still looking at hiking interest rates. So their own hike is still showing more positive results because you have seen this inflationary trends in the UK right now. However, in Nigeria, it's a different case. We are still seeing inflation sustain its uptrend. So for the UK government, I believe that we are still going to see more hikes.
The NPC has always said its reason for hiking interest rate is to decelerate inflation, but the opposite has always been the case as inflation rates keeps rising. Why is this?
Okay, so thank you for that. Now, concerning this is what I would just say about that. Now, one thing about inflation is that there are some forces that drive inflation upwards, and we have several factors. There's a particular form of inflation in which you have demand, excess demand in the economy. And whenever we have excess demand in the economy, it means that people are buying because they have a lot of like let's say surplus cash or surplus inflow in their account. So this tends to like be this kind of a demand push inflation where people are going to be buying more and are going to be spending more. So this thing usually like drive inflation upwards, and you can relate that to like the US economy. Also, we have seen the wages rise significantly over time, and whenever the wages rise, it means that there's going to be more income in the purse of the normal UK citizen or US citizen rather, and the household. So this thing usually like drive inflation upwards, and then MPC, the US Fed, they will now come around and say that okay, let us reduce this by hiking interest rates, increasing the borrowing cost. So this is going to like reduce people's spending. It's going to reduce productivity in the economy. However, in this case of Nigeria, what we are saying is that there is a cost push inflation. This kind of inflation we are having is that we are seeing increases in production costs. We are seeing increase in some other costs in the economy, like the cost of production, the cost of activity. So this particular thing is not really speaking about the fact that we have surplus cash in our hands. So the reasons for our own inflation is different from what we are seeing in other economies. Now, when you now look this when they started hiking interest rates, they are hiking interest rates in prices of food items is coming out is based on the fact that we are seeing increase in the cost of production, not because a lot of money to buy things. So that is one major difference between the Nigerian economy and the US economy. Borrowing cost of capital. And whenever we do that, one thing is going to lead to is going to lead to a situation in which there's going to be increased cost of production.
Well, we'll take a break now, but Money Matters returns shortly. To stay with us.
Opinions are free, facts are sacred, the truth is universal.
Now, let me ask you, Colonel, how, in practical terms, can we, for instance, de-escalate the tension?
Governments must find the political will.
On Digi 360, we give you a complete dose of everything. Opinion, facts, and undiluted truth.
I hardly believe what politicians say in this part of the world.
A new Nigeria is possible, a future is possible, a great country is possible.
We delve into the issues, dissect it so that you can understand it and use it to take action. Digi 360, dissecting the issues.
In the last 3 years, we have built a multi-purpose center, which is the envy of all in our constituency. And I can tell you that the people who are living there are already enjoying it.
Guy, do you think what this man just said is true? See, I seriously doubt. I'm sure it's one of those their silly lies.
And wait, do you know there's a way to find out if these things he's saying is true or not? This is the Construct app. It gives people like us a sure way to track implementation of constituency projects. It gives valid and verified information on location of projects, amounts allocated, amount funded, the level of job done, and even the profiles of concerned legislators. You and I can post directly on this app.
Are you serious?
This is the Go-To app if you want to know how our Commonwealth is being expanded by the government.
Wow. Let's even see if what this man said is true. Show me.
The Construct app is developed by Other People Nigeria with support from USAID and is available on both Google Play Store and Apple Store.
And it's true.
Of course, I told you.
Welcome back to the program. Olabi Samson, who is the Research and Portfolio Management Associate at Zcrest, is still with us. Thank you very much for standing by. We know that policies usually take some time before we begin to see the effects. Now, is that what the situation is right now in Nigeria?
So as I've said earlier, it's not really unfortunately that's not the case in Nigeria because even though there's going to be a time lag, we should have been seeing the impacts already. We started hiking interest rates since last year, so we should have been seeing the impacts right now. However, we have not really been seeing the impacts. We have not really been seeing inflation subside significantly. So it's something that let's say it seems as if we are just using some policies and we are just using some tools rather that are not really tackling inflation the way it's supposed to be. So it's not really a matter of time lag. It's just a matter of the fact that the cost of inflation are different and the tools they are using to fight this inflation are not the tools that are supposed to.
Now, we've seen some policy reforms under President Bola Tinubu, such as the fuel subsidy removal policy and tax relief. Are we on the right track?
Okay, so thank you very much for that. Well, I would say that as long as we have seen some policies and some changes, I will say that we are on the right track. And I'll speak to the fact that the unification of the FX system, although they've said that it's not really unification, that you're just trying to find a way that we have a standard and a formal FX ironing window, and then other ironing windows were collapsed. And one thing I would just say about that is that that particular move is a very vital move for the economy. because when you remember in 2017 when they created the IRA window, we saw influx of foreign portfolio investments into the country, and this is because investors and foreign portfolio investors particularly, they like a system of economy in such a way that they will have a free will, they will have free entry and free exit, and they will be able to like monitor the FX system, and they will also be able to like form the trajectory of the FX system, which is by making sure that the forces of demand and supply are the ones that are setting the price and setting the exchange rate. So that is one thing that we see that happened in 2017. However, when the CBN decided to like peg that rate, it caused this kind of like sentiment and apathy that foreign investors were not able to repatriate their funds from the Nigerian economy, and the limits on the FX that has to like go out also have a severe impact on the economy. However, what we've seen right now from the unification of the FX system is that we are now seeing a system in which the forces of demand and supply are going to like be able to set the rate of the FX set the rate of FX transactions. So this really bodes well for the economy because we are going to be seeing more of foreign portfolio investment into the economy. And as I've said before, when I checked the NGX site, I saw that the foreign inflows into the economy rose significantly in between May and June. So we've seen that surge. It was around like 3 billion naira in around March. However, in around April rather. However, in May and June, we saw a significant increase up to like 27 billion and up to like 24 billion respectively for May and for June. So these particular figures are showing that foreign investors are still willing to like re-enter the Nigerian economy. So this is something that we really, really need. So we have been seeing like a significant uptrend in the Nigerian equities markets, and we'll also see this uptrend in other markets going forward. However, this is something that is very, very important. So that policy is something that a lot of like foreign investors have been waiting for over time. And also concerning the removal of fuel subsidy, this is also something that is very, very key and very, very pertinent to the economy, even though we are seeing that the adverse effect is like really, really like having a significant negative impact on the Nigerian citizen. And we have seen like the cost of transportation has increased significantly. However, it's something that we need to do so that we are going to see there's going to be more transparency in the markets, and there's going to be limited exploitation in the oil market. So all these policies are things that is really, really significant and very effective for the Nigerian economy. And furthermore, just to like close this my point, what we saw concerning the electricity side also, where they said that they're going to be removing subsidy for electricity, is also something that is going to drive productivity, because when we have a forces of demand and supply determining the price of some certain cogent goods and services, it tends to like give this kind of free will for the producers. It tends to give this kind of transparency for producers, so they will be able to like produce more. They will be able to like determine their cost, and they will be able to determine their price, which is something that is very, very important. So going forward, these are policies that are very, very nice, which are very, very good for the economy. We will have these adverse impacts at first. However, as time go on, maybe in the coming months, I believe that we should be in a better place rather.
Now, finally, before I let you go, putting all of these economic realities together, what are your expectations for the next quarter?
Okay, so concerning that, what I would just say is that whenever there is a change, let's say whenever you want to like do something different, you want to do something new, it is not always very, very conducive and very, very like let's say convenient at first if it is being handled well. And I'm placing emphasis on that if it is being handled well, when we change the changes we have seen in all these policies, if it is being implemented and handled well, we are going to be seeing positive impacts over time. It is not something that we are going to expect in the short term. However, in the long term, we are going to like experience like a positive impact. However, in terms of what we are seeing currently, we are seeing that we are seeing the negative side of it right now, which is something that is expected affected is something that it cannot be averted. However, if these policies are implemented and monitored perfectly well, we are going to see positive impacts going forward.
Well, Owolabi Samson, Research and Portfolio Management Associate at ZCREST, thank you very much for your insight. And that's it on Money Matters. Many thanks for watching. I am Folashade Ogurinde. Bye for now.